Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. It's been impossible to sleep because it's just flying across the radar now, isn't it? It's so intense. I wrote an article which was prescient, I thought. Debt, virus and locusts create a perfect storm for Africa. That's in the Africa report, and have a read because it's kind of playing out as I predicted. Let's start with the markets, but they're so fast moving it's difficult to keep up. Dow entered a bear market, down 20% from last month's record close. I think it's the fastest bear market in history. This chart is from Holger. As I said severally, that there isn't a vaccine for the markets now because it's been virucided. Dow Jones, President Trump, as of tonight, just put all the gains generated since his election in complete jeopardy. And that's FX Pip Titan, and he's completely correct. It's the absolute failure on President Trump's part to understand the exponential mathematics of a virus. And therefore his boo-boo, the flu response has utterly panicked equity investors, in my view. US bond land has been extraordinary. This is from IV_technicals. We saw this enormous surge in prices. Now we've backed up and we've got essentially a dislocation here. Markets, this is from David Inglis this morning. Looking at this dislocation, especially in the stock market today, markets are properly freaking out. DAX future plunges 5% below critical 10,000 mark to the lowest level since 2016. That was Holger before the market opened, and we took a big tumble when we opened. The number of bear markets is spreading quickly. That's from JS Blockland. So in those series you can see that the markets have taken complete fright, as I predicted actually several times. And I don't think it's over by any stretch of the imagination because, as I said in my articles, we've reached an unprecedented moment. Let's divert briefly into some home thoughts. This is the pyramid of the moon taken from the pyramid of the sun at Teotihuacan by Mike Elgin. Masai Mara National Reserve, photo by Monica Moy via Kenya Pics. That took me back to Kerouac on the road. Panthera pardus, we saw this leopard in the Mara and it passed right in front of us and looked Aisha in the eye and took her aback. Elephant, Masai Mara, an enormous bull elephant, as you can see. And some years ago, with a good friend of mine, Moshe, who's in Sri Lanka, the sunset in the Masai Mara, as we enjoyed some sundowners. Political reflections. Let's just dive into the situation. Cumulative cases outside China. The trend is also exponential. Cases are doubling every 4 days, multiplying by 10 every 14 days. I expect 350,000 cases on the 25th of March, Zorina Q. I can't remember how many fatuous debates I had with people about who did not understand the mathematics. COVID 2019 overview as of March 12, 2020, 3:45 GMT, 126,048 cases. 4,633 deaths, 5,451 severe critical, 68,191 recovered. That's from the COVID 2019 app. Daily deaths from COVID 2019 in China versus the rest of the world. Notice the sheer speed of the takeoff in the rest of the world is just utterly insane. Dr. Eric Ding. Those three series inform us of Gladwell's tipping point moment in an epidemic. When a virus reaches critical mass, it's the boiling point. It's the moment on the graph when the line starts to shoot straight upwards. 7,150 new cases were reported yesterday worldwide. That's from COVID 2019 app. Dr. Tedros, who really is unspeakable, characterizes the COVID-19 as a pandemic. 10 minutes past midnight, 24th of February, I was saying what is absolutely clear now is that we're dealing with a virus that has turned exponential and non-linear and is a pandemic. Indeed, as I wrote then, the viral moment has arrived. 40,000 total confirmed cases in the rest of the world, excluding China, Jody graphics, and those numbers are clearly undercounted. Italy orders closure of all shops except groceries and pharmacies. We're seeing now a major lockdown, and I expect it across the entire European Union. And we don't get a real sense of what it's like at the front line just looking at the charts. And I came across this article in ITV News, Annals from the Front Line, Healthcare on the Brink of Collapsing. Doctors share stories from inside the Italy coronavirus quarantine. A lot of patients need help with breathing, but there are not enough ventilators. And this, just think of how many days it's taken to get to this point. Hardly any. They've told us that starting from now, we'll have to choose who to intubate. Priority will go to the young or those without comorbidities. At Niguarda, the other big hospital in Milan, they're not intubating anyone over 60, which is really, really young. We've had no critical cases among children, but with children, viruses are much less aggressive. Think chickenpox or measles. But the very young are crazy carriers. A child with no symptoms will go to visit its grandparents and basically kill them. So it's essential to avoid contact between them. All the recitation bays are full. They're having to triage, deciding who to intubate and who to let die. He added, "You have no idea how many young people are here. I mean, even 20-year-olds with no underlying conditions, in need of assisted breathing because of horrible pneumonia. They aren't the resources to screen doctors for COVID-19 anymore. They're just telling them to stay home if you have symptoms, otherwise come to work." The World Health Organization ranks Italy second in the world for healthcare provision, with only France rated higher. The UK's 18th. So think of that. They are actually one of the premier healthcare systems in the world, and they are maxed out already. So let's move on to Trump. Tim O'Brien, who is the political ally of Mr. Bloomberg, says Trump doesn't understand the basics of economics and or of math. POTUS is essentially innumerate. He believes in magic, and I think that's correct. This is what Trump was doing on February 28th, right around when he wrongly claimed that the number of cases in the US would go down close to zero. That's from Brian Klass. As I said, the viral moment has arrived. The Daily Show, one man immune to information, pandemic. Based on the president's Twitter feed and public remarks, the most important story right now for him is not how the country is faring under the coronavirus, but how he is being perceived throughout. I think hindsight will show that this was a Shakespeare-level problem of hubris and narcissism. And essentially, he had an opportunity because he knew what was coming from China. He did nothing about it. And the geopolitical hit that the United States is taking, and I have many American friends, is shocking. It's shocking. Carly Simon, you're so vain. Dr. Fauci, if we are complacent and don't do really aggressive containment and mitigation, the number could go way up, many, many millions. Trump has spent weeks downplaying the crisis. Vanity Fair, who make up sources which don't exist, wrote yet another phony and boring hit piece. The facts are just the opposite. Our team is doing a great job with coronavirus, tweeted Trump. Like in the EU, US has the biggest daily new cases increase yesterday. Because of delayed testing, we can expect the kind of growth of Iran, if not more, as US population is 4 times larger. We can expect much larger numbers, Remy GMI. Now, a very interesting essay by Pepe Escobar, Is the Planet Under a Spell of a Range of Black Swans? A Wall Street meltdown caused by an alleged oil war, plus the uncontrolled spread of COVID-19, leading to an all-out cross-asset pandemonium. As billed by Nomura, what turned into a de facto OPEC plus meltdown was quite the game-changing plot twist. Moscow saw the perfect window of opportunity to strike, targeting the US shale industry. Shares of some of these US producers plunged as much as 50% on Black Monday. They simply cannot survive with a barrel of oil in the $30 range. And that's where this is going. After all, these companies are drowning in debt. A $30 barrel of oil has to be seen as a precious gift stimulus package for a global economy in turmoil, especially from the point of view of oil importers and consumers. This is what Russia made possible. As Persian Gulf traders stress, the key to what is perceived in the US as an oil war between Moscow and Riyadh is mostly about derivatives. Essentially, banks won't be able to pay those speculators who hold derivative insurance against a steep decline in the price of oil. The consensus among Russian energy giants was that the current market setup, massive negative oil demand, positive supply shock, and no swing producer inevitably had to crash the price of oil. Moscow's move against the US fracking industry was payback for the Trump administration messing with Nord Stream 2. Oil accounts for over 50% of Saudi GDP. Riyadh needs oil at no less than $85 a barrel to pay its bills. The 2020 budget, with crude priced at $62 to $63 a barrel, still has a $50 billion deficit. The oily irony is that the top price war victims are an industry belonging to the American protector. Every grain of sand in the Nefu Desert knows Jared of Arabia's Kushner's WhatsApp pal MBS has been de facto ruler for the past 5 years, but the timing of his new purge in Riyadh speaks volumes. The CIA is fuming. Nayef was and remains Langley's top asset. The fact that the Saudi regime spin denounced Americans as partners in a possible coup against MBS should be read as CIA. The game now points to a confluence of Wall Street panic, COVID-19 mass hysteria, lingering myriad aftershocks of President Trump's global trade mess, the US election circus, and political instability in Europe. These interlocked crises do spell perfect storm, yet the market angle is easily explained as perhaps the beginning of the end of Fed pumping tens of trillions of dollars into the economy through QEs and repos since 2008, calling it the calling of the central banker's bluff. Amid thick fog and discounting the usual amount of disinformation, a Rabobank analyst, among others, and I alerted you to that, came up with a plausible 4 COVID-19 scenarios. He now reckons it's getting ugly, and the 4th scenario, the unthinkable, is not far-fetched anymore. To a great extent, it will all depend on how fast China, the inescapable crucial link in the global just-in-time supply chain, gets back to a new normal. You know what I think about that. Offsetting interminable weeks of of serial lockdowns. Despised, discriminated, demonized 24/7 by the system leader, China has gone full Nietzsche, about to prove that whatever does not kill you makes you stronger when it comes to a people's war against COVID-19. On the US front, there's scant hope that the gleaming black helicopter money hawk will crash down for good. The ultimate black swan will have the last word. RT.com tweeted, "Frack you, US shale will be a victim of the Saudi-Russian price war." As I've said in a tweet to Javier Blas, so maybe it was in fact a Putin MBS two-step, and we're focusing on a pretend fight where the real target was US shale. J. Kyle Bass put it more pithily, the Saudis and Russians have flown a metaphorical jet into the heart of the US energy business. This is the equivalent of an economic 9/11, with the Saudis as the pilots again. US energy independence is under attack, and it's not for lower prices at the pump. Putin, as I wrote in 2015, is a geopolitical grandmaster, and the challenge for China remains a second-round effect of infections. Essentially, as I said severally, fantasy predictions of a V-shaped recovery in China, in my view, are dashed. China cannot just crank up the factory because that will risk a second round of effect of infections. In China, what is thriving, this was from an essay a few weeks ago, and it's thriving in the US, is that ridiculous red culture and the nauseating adulation that the system heaps on itself via shameless pro-party hacks who chirrup hosannas at every turn. This is China's CCP propaganda video after the 1976 Tangshan earthquake via W.B. Yeats. Warm welcome to the leaders of the party. All the party officers, medical staff and citizens achieved a glorious victory in their rescue efforts. Death toll more than 240,000. Cakesin has got a hard-hitting investigative report. Wuhan doctors say colleagues died in vain amid official cover-up. The hospital where coronavirus whistleblower Li Wenliang worked and died has been hit harder than any other COVID-19, due in part to throttling of information by officials. Central Hospital of Wuhan, where Li died, has seen over 230 of its 4,000 medical staff diagnosed with COVID-19, the highest rate of infection at any hospital in Wuhan, the epicenter of the outbreak. False information released by the relevant departments claiming the disease was controllable and would not spread from human to human left hundreds of doctors and nurses in the dark, doing all they could to treat patients without knowing about the epidemic, the department told Cakesin. And even when they fell ill, they could not report it, they could not alert their colleagues and the public in time, despite their sacrifice. This is the most painful loss and lesson. And then it goes into deep analysis of how the information was not allowed to be shared. They were accused of rumor mongering, and people died for it. Basically, it's just shocking. Cakesin previously reported that on December 27, the Central Hospital of Wuhan sent swabs from a 41-year-old pneumonia patient who had no history of contact with the South China seafood market to a Beijing-based lab for analysis. That is the point. It has nothing to do with that South China seafood market, I'm afraid. So this is a photograph of Li Wenliang's colleagues as they wait outside the ICU while he was in a critical condition. You will all be no better than fields of garlic chives, giving yourselves up to being harvested by the blade of power time and time again. Groucho Marx, who are you going to believe, me or your own eyes? As I quoted William Burroughs, a non-linear and exponential virus represents the greatest risk to a control machine. Xi Jinping and his algorithmic control, they now turn to rule over the people by means of what could be dubbed big data totalitarianism and WeChat terror. Now, as I wrote about the origins of the virus, I was quoting Don DeLillo, there's always more to it. This is what history consists of. It is the sum total of the things they're not telling us. And Nature has an article, Why Does the Coronavirus Spread So Easily Between People? To infect a cell, coronavirus uses a spike protein that binds to the cell membrane, a process that's activated by specific cell enzymes. Genomic analysis of the new coronavirus have revealed that its spike protein differs from those of close relatives and suggests that the protein has a site on it which is activated by a host cell enzyme called furin. This is significant because furin is found in lots of human tissues, including the lungs, liver, and small intestines, which means that the virus has the potential to attack multiple organs, says Li Hua, a structural biologist at Huazhong University, where the outbreak began. SARS and other coronaviruses in the same genus as the new virus don't have furin activation sites. This is the point, okay? It's been inserted. The furin activation site sets the virus up very differently to SARS in terms of its entry into cells and possibly affects virus stability and hence transmission. Activation site is found on a protein called hemagglutinin, not on the spike protein. Flu virus that caused the deadliest recorded pandemic, the 1918 Spanish flu pandemic, doesn't even have a furin activation site. Experiments have shown that the spike protein binds to a receptor on human cells, known as ACE2, at least 10 times more tightly than does the spike protein in the SARS virus. This is an image of the new coronavirus taken with an electron microscope. I take you back to that quote of Scott Burke, what are the odds that a SARS-like coronavirus with overlapping genetics from HIV mutated and crossed over into humans? Think about that. And conversely, what are the odds it leaked out of the laboratory? If they can get you asking the wrong questions, they don't have to worry about the answers. A paranoid, someone who knows a little what's going on. Doctors detected coronavirus in cerebrospinal fluid of a Japanese man in his 20s, which propelled Japanese doctors to speculate the virus may also invade the human brain. It is the first case that proves that the novel coronavirus can damage people's central nervous system. That's why so many people just collapse all over the world. Doctors conducted gene sequencing on his cerebrospinal fluid as he showed symptoms of neurological disorder like twitching on the face after days of treatment, while a CT scan and biochemical test results could identify the causes. It is said that 30% of the 214 patients the team studied showed symptoms in their nervous systems, and the rate is even higher in critical patients at 45.5%. I take you back to that Reddit article, which I'm not going to vouch, but where he said the resulting high rates of cancer, premature dementia, suicidal depression, and death by organ failure could easily be suppressed when they were testing them in the camps in Xinjiang. To put it in a more direct Western manner, they started to melt. Death usually occurred through multiple organ failure. This was from a video from a self-described doctor in Wuhan back in early February. I saved the screenshots because of how he described the pathology of the virus. That's Dave Greenwich, 57. And this essentially explains the sudden collapse and seizure-like behavior seen with some of the victims of the virus. As I said previously, viruses exhibit nonlinear and exponential characteristics. Acceleration of the coronavirus contagion looks much faster in US than in Italy and Korea. Trump made sure almost no one got tested for over 2 months, as he likes numbers very low. And that's the non-linearity and exponential risks. Let's turn to currency markets, but this was from about 30 minutes ago, I can't check. Euro dollar 113.18, dollar index 96.339, Japanese yen 103.59, Swiss franc 0.9339, the pound 128.12, the Australian dollar 0.6450, India rupee 74.375, South Korean won 1205.83, the rial 481.53, fresh record all-time low, Egyptian pound 15.699, and the rand 16.3961. This is a chart of the dollar index. I'm still in two minds about the dollar. I think it's going to strengthen further against emerging and frontier market currencies, but weaken against the yen. and probably stay around here against the euro. Euro dollar, last time I checked, 113.15, but looks soft at the moment. Boeing said to plan full drawdown of $13.8 billion loan as precaution. No one wants the 737 MAX, drawing down their credit lines and the stock in free fall. That's from Bianco Research. We know where this is going. He's suggesting Chapter 11. After last week's rally, gold has been forming a bull flag. It's been disappointing. It should be over 1,700 by now, but I think you've had lots of margin calls, and when the move comes, it's going to be dynamic and exponential. So I'm sticking with it for now, but obviously 1610, and I'm bailing out. Last time I looked, we're around 1640. Crude oil back under pressure, $31.70. There is no demand. There aren't going to be any flights. Think about it. Brazil's stocks sink 12%, bringing losses so far this year to 30%. President Bolsonaro pronounced, "You shall know the truth, and the truth shall set you free." Viral outbreak shuts debt markets for African borrowers. Countries in sub-Saharan Africa will have to shelve plans for Eurobond issuance as yields rise and the spread of the coronavirus limits travel, according to investors, including Capitulum Asset Management. After rising 40 basis points in February, average sovereign dollar bond yields in the region have climbed 100 basis points in March to the highest in more than a year. Sub-Saharan African Eurobond issuers will probably have to wait for the next window, given the strong drop in commodity prices that has led to the region underperforming emerging market peers in the past week. There's the likelihood that roadshows will be very difficult given the coronavirus and current preference for safe haven instruments. Right now, the mood is so bad that nobody will look at Eurobond offerings from Sub-Saharan Africa, said Lutz Roymeyer. When even regular issuers and standard names not come to market, then irregular first-time issuers or exotic names from Africa will have a hard time to place bonds. IMF has made $50 billion available to provide assistance. Everybody's going to be knocking on that door. And I wrote about this all in that article, Debt, Virus and Locusts Create a Perfect Storm for Africa. I was saying that the virus is not correlated to endogenous market dynamics, but is an exogenous uncertainty that remains unresolved, and therefore it is a black swan. I spoke about fantasy predictions of a V-shaped recovery. I spoke about the correlation between Chinese domestic growth and demand for African commodities. 1% equals 0.6 pull on sub-Saharan Africa. At the moment, it's a push. Adesina debt is not a problem. It's very bad debt. That's a problem. Totally misread the signals, unfortunately, as did his predecessor, Kabaruka. Very few of the investments made with all this borrowing are within spitting distance of providing a return on investment, rising debt service ratios, and essentially I'm predicting that South Africa, Nigeria and Angola are going to be around negative 2% GDP this year. The Rand, which has been in free fall, has a lot further to fall, and this was all before the viral infection. Nigeria's oil revenue is cratering. There is $16 billion of hot money parked in short-term certificates, which is all headed for the exit as we speak. A currency devaluation is now predicted and predictable. East Africa is a bright spot, but is facing down a locust invasion. It's practically biblical. I concluded by saying, this is a perfect storm, buckle up, and let's stop popping the quaaludes. Here you see medical staff wearing protective gear at a new section specialized in receiving anyone who may have been infected with coronavirus. Panic selling on oil plunge drives Nigerian bond yields higher. Nigeria's Eurobonds due 2047 dropped for the 6th straight day on Wednesday as investors dumped the notes over fears of a Naira devaluation after global oil prices plunged this week. Yields on the dollar securities jumped 28 basis points to 10.4%, with currency speculators now betting that the Central Bank of Africa's top oil producer will be forced to allow the Naira to weaken. They've got no bullets. It's over. I'm afraid. The Naira was quoted at 367.53, the weakest level since at least 1994. Yield on Zambia's 2022 dollar bonds climbed above 30% today. The price is now below 55 cents. That's from Paul Wallace in an article in October last year called Ozymandias. I said the canary in the coal mine is Zambia. One case of COVID-19 in Madagascar, but essentially we're now past the point of no return. Go back to that nothing, nothing, nothing. We're now getting cluster, cluster, cluster. Our testing is worse than Trump's, and the next thing it's going to be boom. I have to assume, as I did on the 27th of January, that the coronavirus is already in Africa, but just not diagnosed. That's a racing certainty. Ethiopia, which about a week ago had done 23 tests, I hear has done about 30 tests. Finance Minister Mithuli Ncube says Zimbabwe is to adopt a managed floating exchange rate system. In Cube, to correct this forex anomaly, a Reuters trading platform is being implemented immediately. This platform will allow forex to be traded freely amongst the banks and permit a true market exchange rate. And then Wamagaisa says Mithuli and John made an oxymoronic statement. Managed floating exchange rate, you can't have your cake and eat it. It's either floating or it's managed, not both. They've been managing it anyway, interbank rate, which is why it's lagging behind the floating rate. I spoke previously about the China emerging markets frontier feedback loop phenomenon, saying it was positive for the last 2 decades, has now undergone a trend reversal. I said the fallout is being experienced as far away as Germany, and that the Rand is the purest proxy for this phenomenon. African countries heavily dependent on China being the main taker are also at the bleeding edge of this phenomenon. This pressure point will not ease soon, but will continue to intensify. South African All Shares down 14.03%, dollar rand. Have a look at the chart. Where it's going, I don't know. Egyptian pound 15.699, EGX 30 down 19.82% year to date. Nigerian All Share down 12.18% year to date. Ghana Stock Exchange down 1.9% year to date. KCB Group reported full year earnings per share was up 3.576%. Loans and advances to customers grew 17.516%. Total assets grew 25.795%, so they went for growth. Profit before tax up 7.529%. Earnings per share up 3.576%. Dividend was maintained. And it's a very juicy dividend, actually, 3.5 shillings a share. Cost income ratio, excluding provisions, at 45.7%. All business lines were strong on both funded and non-funded income. Enhanced investments in digital channels pushed non-funded income up 22.6%. Number of non-bank transactions increased to 97%, with the majority of them conducted via mobile devices. Mobile loans advanced increased to 212 billion from 54 billion in 2018. Cumulative disbursement via mobile over the past 5 years totaled 319 billion. Have a look at this image from Trading Room. Mobile loans advanced increased to 212 billion from 54 billion. Have a look at this from Trading Room as well. Total assets surged 26%. And then highlights of performance from the KCB Group subsidiaries in 2019, which saw 7.4% growth in its international business. They bulked up the balance sheet. Obviously, NBK was a net add. It will be interesting to see how aggressively they pivot post the rate cap removal. The price of medicines, drugs are skyrocketing here. In Nairobi, a tin of PCM has jumped from 200 shillings to 1,200 shillings. This speaks to the supply chain challenge. Nairobi All Shares down 10.36%. NSE20 is down 12.73% year to date. Thank you for listening.